Welcome to this explainer. Okay, so today we are going on a deep dive into the absolute psychological foundation of the financial markets. We're going to look at what truly separates the winning Forex traders from, well, the rest of the pack. Because look, if you've been putting in the hours, obsessing over the charts, studying all the patterns, but you still find yourself struggling to hold on to consistent profits, you are in exactly the right place. Today, we aren't just talking about strategies or another fancy indicator, we are breaking down the literal mindset of success. Let's kick things off with a pretty stark reality check. 90%, across all the sources we've analyzed, from deep market psychology breakdowns to actual trader journeys, this one statistic just constantly echoes through the trading world. 90% of retail traders lose money. If you've ever felt the absolute sting of a blown account or the maddening frustration of giving back a whole week's worth of profits in just one single afternoon, please understand you are not alone. You're experiencing exactly what the vast majority of participants experience. It's a brutal arena. Okay, let's dive into this. Have you ever wondered why incredibly smart people lose control in the markets? Doctors, engineers, wildly successful entrepreneurs, people with super high intelligence, they often come into trading and just completely fall apart. Why? Because high intelligence absolutely does not automatically equal trading success. As our sources consistently point out, knowledge without a rock-solid mindset will eventually just be overpowered by your own emotions. You aren't losing trades because you aren't smart enough, you're losing control. So here's our roadmap for getting out of that 90% failure bracket. First up, we'll examine the 90% trap. Then we'll explore a core identity shift, gamblers versus business owners. Third, we'll apply these exact concepts to a highly volatile asset in mastering XAUSD trading. And finally, we'll land on the ultimate trading truth. Let's jump right in. Starting with Section 1, the 90% trap, and escaping the cycle of doom. Most beginners are just stuck on a treadmill. They're endlessly searching for some holy grail indicator, or they're jumping from one strategy to the next every single day. They think the reason they're losing is because their strategy is wrong. But what they actually need isn't a new technical setup. They need a massive psychological reset. I absolutely love this quote from Tradeciety. Your stop loss is a seatbelt. You don't put it on because you expect to crash. You put it on because if you do, you survive to drive again. This is a brilliant metaphor, and it really strikes at the heart of the 90% trap. The traders who skip using a stop loss aren't being braver. They're just one bad trade away from blowing up entirely. A profitable trader simply understands that losses are just a normal cost of doing business. Capital preservation is everything. If you survive today, you get to trade tomorrow. Which brings us to Section 2, gamblers versus business owners. This is a massive mindset shift. We're transitioning from understanding the problem to dissecting the core differences between winning and losing. We're going to contrast two completely divergent psychological approaches to the market. One leads to consistent wealth extraction, and the other, well, it leads to emotional ruin. Try to imagine the frantic, anxious inner monologue of an unprofitable trader. It goes something like, I literally must recover my losses today. This setup looks, okay, let me just enter. Maybe I can double my account really quickly. Does this sound familiar at all? This is the ultimate emotional trap of revenge trading and impulsivity. It's driven entirely by panic and a desperate need for quick money. When a trader thinks this way, they're completely ignoring their system and letting dopamine and emotional reflexes take the steering wheel. Now completely flip the script. Picture the calm, almost stoic inner monologue of a profitable trader. I only need a few high-quality setups this week. If I lose, it's part of the game. My job is to protect capital and follow my system. The difference is literally night and day. This mindset is patient, unbothered, and accepts losses calmly as just a statistical reality, kind of like pulling a red marble from a probability jar, as one of our sources describes it. So, the crucial takeaway here is this. The biggest difference is that profitable traders think like business owners, and unprofitable traders think like gamblers. A business owner manages risk, focuses heavily on execution, and looks for long-term consistency. A gambler, they just throw money at the market out of boredom or desperation, hoping for a lucky break. In this business, your discipline matters way more than your ability to predict the next candle. Now, what's really interesting is the sheer volume of differences in daily trading habits. Profitability isn't about knowing some secret chart pattern. It's an entirely different behavioral identity. Profitable traders think in probabilities. Unprofitable ones think every single trade absolutely must win. Winners journal and review their trades. Losers just blindly repeat their mistakes. Winners seek long-term consistency. Losers want quick money overnight. Profitable traders wait patiently for setups, risk tiny percentages, and stay disciplined during drawdowns. Unprofitable traders force trades out of boredom, over-leverage their accounts, and totally panic during losses. It's just a completely different way of operating, from top to bottom.
All right, let's move to section 3, Mastering XAUSD Trading and the Gold Rules. We are going to ground all this high-level psychology in practical application by looking specifically at the gold market. Gold is notoriously volatile, and it's an arena where your psychological flaws are exposed and punished incredibly fast.
Here is exactly what ruins accounts when you're trading in a volatile beast like gold. Unprofitable gold traders are entirely reactive. They chase every little candle movement, they enter totally randomly during consolidation phases, they trade without a stop loss, they immediately overtrade after taking a hit, and they hold on to losing positions emotionally, just hoping and praying the market will reverse. It's chaotic, it's emotional, and it is highly, highly destructive. And this brilliantly illustrates the flip side. Professional gold traders follow incredibly strict and, frankly, really boring rules of engagement. They sit on their hands and wait for London or New York session volatility. They align with a higher time frame bias. They demand absolute confirmation before entries. They avoid emotional scalping like the plague, and they strictly cap their risk at 1 to 2% maximum per trade. They aren't trying to catch every single move. They're just extracting their edge when the conditions are absolutely perfect. Which brings us to our final section, the ultimate trading truth: process over prediction. We really need to land on a sobering but ultimately empowering conclusion about what actually creates wealth in these markets. It is time to completely shatter the illusion that more is better. You do not become profitable by watching 100 different indicators. You don't become profitable by taking dozens of trades a day or by trying to predict every single wiggle of the market. What you actually do to become profitable is brutally simple. You repeat one proven setup, you manage your emotions, you protect your capital, and you stay consistent for months on end. Let's see how this builds into an actual business cycle. As noted in our sources, it's a simple cycle. Try, repeat, adjust, improve, grow. So many people think trading is about finding a perfect strategy that literally never loses. It's not. It is this exact cycle, over and over again. It's adjusting your risk, it's improving your discipline, and it's not quitting when you take a discipline loss. It's a boring, repetitive process that slowly, methodically builds an edge over time. Which leaves us with this final, ultimate truth. In Forex, discipline and psychology usually matter way more than strategy alone. Your edge isn't just in the tool you use, the edge is in you. So what's it going to be? Are you going to spend another entire year endlessly searching for a magic indicator, or are you finally ready to start mastering your own mind? Take this knowledge, structure your mindset, and I genuinely hope this explainer helps you build a truly profitable framework.